Eric Muathe with Muathe.com with another video on intraday trading, or what is traditionally known as day trading. So let's get to it. So let's take a look at another market. The previous video was on the Swiss market or Sweden. Now let's take a look at the Canadian market intraday. Let's say if you are trading this on a minute-to-minute, hour-to-hour basis intraday. So let's begin with the big picture. The big picture is similar to that of the Swedish market, and we can see that we came here in the last couple of months on a backtest failure from the previous movement off the highs of 2015. So we are trying to gauge the big picture, and over the last 3 to 4 5 months this market has generally been sideways to down. So we know that from this big picture, having seen this rejection, also rejection at 69.1. So we've already almost ascertained that there's a more likelihood for markets here to be sideways to down. So let's go to the hourly. And on the hourly, this is live trading. We can see that on the hourly, if we go back, and I've gone back all the way to show the highs of the Canadian market, going back to the highs there. So what we're going to do is initially figure out where that major break took place. Why that break? What we are doing is we want to take the information that the market is giving us. So the market tells us that once the RSI broke that trend line, this was a major high. So we don't want to impose our own thinking and thought processes. We just want to take what the market is responding to. So what we're going to do is take a line from there, or that precise level, draw a horizontal line. Now I call this method the uniformity method. Again, if you want to learn more about this, there's going to be a link in the description of the video. So what we do here is, because we had seen the big picture had come back to a stall point over the last couple of weeks and months, every time we hit this line with any type of uniform activity rejection, we know there is a trade to the downside. So all these were close enough. We target here again. You take a trade there. Here, same thing, intraday high. We hit that level, another intraday high. And as of right now, we are back to test this line. So we are still within potential resistance or breakout. Now keep in mind, there's nothing stopping the Canadian market from breaking out above this, which would be a change, because keep in mind, over the last couple of weeks and months, it's been trending lower in the big picture time frame. But there's nothing that stops it from changing its direction and ultimately beginning another move to the upside. So be aware that things can change. It's always a fluid market. And the point is, right now we are back here, we are testing this. So if you are an intraday trader, of course you watch this level and start looking for a reason maybe to go short if you see confirmation of resistance. So you have to see visual confirmation first. Now this is 6 months, I believe, going back to, let's see how many months, 9 months hourly. So what I'm going to do is, let's zoom in so you can see why you need confirmation of resistance on this precise line right here. All right, you need confirmation of that resistance in the current environment before you take an intraday short position. What you do, let's take a look. Let's zoom in. So now this is 3 months and 3 months hourly. Keep in mind, on my RSI the setting is 26, and I always get the question, why 26? Well, you can always use 14, RSI 14, which is the default on most charts. I prefer to use 26 just from my own research, because it gives us less signals. When you use the 14 setting, there's a lot of signals that you have to contend with. You know what, in fact, let's take a, so this is RSI 26. Well, I wasn't planning to do this, but let's just do it. So right now we have RSI 14, and you can see it's messier. It's got a lot of highs and lows. Compare 14 to 26. Right, I think to me, I would rather use the RSI 26. But you can see pretty much, you can say that there's a general on the 14, there's a line here that could be potential resistance. If and when the market confirms it there, that would be giving you a short-term double top. That should be good enough for a move lower, just like we had double top rejection here during these highs. And of course, you do get some type of a swing trade down. So yes, you can use RSI 14. For my own experience, I use 26. And I don't think either is bad. It's just whatever you feel comfortable using. Well, then that begs the question, why 26? Right? I mean, and I wasn't planning to talk about this, but why 26 and not, let's say, 25 or even 27? It's a good question. Why? Why 26? Well, I'll tell you why. Digressing, but please bear with me. Sometimes it's important. So if you take a look at the Fibonacci series numbers, you start with 0, 1, 1, and then 2, 3, 5, 8, 13, 21, and then you got 34, 55, 89, 144, 233, and then the other one I believe is that 233, I believe? Yes. And then you got 377 now. All right. Sad to say, I know those numbers off head. But what I wanted to do, I wanted to use on my RSI setting, I wanted to use one of these numbers. So for a long time, I have been researching 21. I wanted to use 21 as my default. I also did some experimentation with 34 as my setting on the RSI for anything below the daily. So the hourlies, the minutes, the 30 minutes, the 15 minutes. I was experimenting with these two numbers. Really wanted to use one of these, but just could not get the right mix. So what I did, I took 13 and multiplied it twice. So of course 13 times 2, voila, you get 26. And for some reason, I can't explain it, I'm just telling you, for some reason RSI setting of 26 works great. All right, so now that we've spent a couple minutes, let's go back to the chart. So I'll get a lot of questions about that. I hope I answered some of those. Now take a look at this here. So we know that from a 9-month hourly chart, we are coming to test this level here. So we know it could be potential breakout because we don't know what the market is trying to do. A breakout would be bullish, suggesting there will be higher prices. Confirmation of resistance on this line might suggest there's going to be a pullback. So since it's a live trade, we don't know which way the market is going to take. We just have to wait for confirmation. By confirmation of resistance, you'd want to see that it has turned down, potentially forming a double top. Now the only way we can get that double top is if in the new hour we get that confirmation by the RSI moving lower. In other words, price would have to move lower in the new hour or the next couple of hours, because right now as we go into the new hour, it's about 1 minute before noon. Let me update that. And so if you're watching this, you don't want to take the trade on the opposite side until you see confirmation. So right now we are still showing a positive move there, so you'd have to wait for confirmation by a down hour. In other words, let's take a look at the 30-minute. Let's drill in to the smaller time frame, and on the 30-minute we have a similar situation. You can see that it is coming back to test RSI highs. So we will also need to see confirmation here with a down 30-minute chart before you can take that short position. And on the 5-minute window also, you can use this for guidance. In other words, right now, take a look at the previous high or short-term highs as an example, as a visual example. Improvement to new highs, RSI did not follow through. That negative divergence ultimately led to this drop. So right now we could be looking at potential for the same thing, an improvement in prices. RSI is not necessarily following through. So if you really want to time this, you can also watch this 5-minute window, and once you start seeing this coiling down, and you see this coiling down, confirming that negative divergence. Then from a swing trade, intraday type of situation, this is where you start building your position to the short side. This is how you do it. If you're looking for small time frames, it's pretty much the same thing we look for when we are trading the big time frame. The same principles apply. Eric Muathe, Muathe.com. As always, good luck, peace, and blessings. Ashi.